Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Today I'm doing another Tesla bull versus bear reaction video. This time, however, it's a little bit different. We're going back in time, 7 years ago to 2013, when Tesla was at a market cap of about $13 billion. Today their market cap is 10 times that amount at about $130 billion, and we're in the future that was spoken about on this interview, so it's going to be a great chance to look at what the bears and the bulls were thinking, their reasoning, their vision for the ability for Tesla to execute, what their plans were, and what the future would look like. Without further ado, let's dive in.
$13 billion. That is Tesla Motors' total market value after rocketing up by $13 yesterday, above $100 a share, making it worth more than companies like Netflix, for instance, or even Fiat. So does the electric car maker really merit this valuation? Well, Andrea James is the senior research analyst at Doherty & Company, a bull on the shares with a buy rating, and fund manager Mark Travis of Intrepid Capital Management, who had shorted the stock until it hit $40 a share and thinks it is way overvalued.
Now, I know a lot of people watching this won't have been following Tesla for a decade or so, but I just wanted to highlight that we've been hearing the story from bears from basically day one. Tesla is way overvalued, they're going to go bankrupt, or they're, that kind of thing, and people are shorting the stock, very negative on the company. And this is all just based around their ability to execute in the future. The difference between bulls and bears in the early days in particular was, I believe Tesla can execute versus I don't. It hasn't really changed, but Tesla's still executing.
Guys, thanks so much for joining us. Mark, let's take the short case first. You say it's been incredible and puzzling to see the stock go up. How much do you think is short covering going on here?
Well, Betty Lou, I mean, it reminds me of the Prince song, Let's Party Like It's 1999. It kind of reminds me of some of the things that were going on right before the tech bubble burst in early 2000. But, I think that when you've got a third of the shares sold short, it doesn't take much activity on the ask side of the shares before people decide they want to cover.
I also just quickly want to point out that today short interest in Tesla is only around 11-12% of the float. A few months ago that was closer to 20. However, I'll put up a graphic on the screen showing you in terms of actual dollars of valuation of short interest, Tesla is #1 of all US companies. This is so bizarre. From day one, it's been heavily shorted. Now here we are, 7 years after this went to air. We're still at a situation where Tesla is like literally the most shorted stock on Wall Street.
And this may be one of the best short covering rallies of all time. To take the market cap of a business that's losing money on an operating basis up 10 times in 4 years is phenomenal. But so far, Andrea's certainly been right.
Well, she's been right, but Andrea, you had a $90 price target. The stock's now above that.
It sure is. It got there pretty quickly, actually. The thing that's changed from when Tesla was a $30 stock to today, it's not really what the end market potential is. It's not some of the engineering prowess they have at the company. That's all the same. What's changed is how quickly people are getting it. And Mark, you got to drive the car.
Absolutely nailed it, Andrea. She's spot on. And this has been the case from day one, and it's still the case today. The recent run-up we've seen in Tesla's stock price is literally this process of people getting it. The analysts are finally starting to wake up. It really does take some longer than others, and this is why I'm making these reaction videos, just to give you guys context, stuff that 7 years ago was obvious to somebody like Andrea, not so obvious to other people. Still today, so many people are missing what's already in front of their eyes because they just haven't done the homework. They haven't dug deep enough to realize, Tesla has unassailable leads in data. Their battery tech is like years ahead. It's just, you guys already get this, right? But just watch and notice the sentiment and the discussion around getting it and not, because it's still relevant today, unfortunately. The point Andrea made there, saying, you should actually drive a Tesla, drive the car. Still today, there's analysts that are appearing on television and making statements to the media who haven't been in a freaking Tesla, who are very negative on the company, and they haven't even experienced its core technology. This actually is happening, and there's analysts that are starting to flip who are saying, I drove one and holy crap, these things are freaking amazing. Like, I'm now a bull. I don't know why it's taking so long for people to actually try the product that they're so negative on. But anyway, I just wanted to point that out because today it's still happening 7 years later after this guy was very negative on Tesla, never even been in one, he was short the stock. All right, let's just get on with this. Oh, man.
I understand. I just don't know where I'm going to plug it in, Andrea.
Well, Elon says he
maybe
has
around
a solution.
Maybe around Silicon Valley you can do that kind of thing, but in Northeast Florida there's absolutely no place to charge a Tesla that I'm aware of.
Oh, there's plenty of places to charge it in Florida. Public charging stations, Tesla will be building charging stations, but the best place is your own garage.
Oh, that is savage. Did you see that burn? That was a 10 out of 10 from Andrea. That was I just love the low-key just murdering somebody. Yeah, you can charge a Tesla in your home. Somebody who's short the stock should have enough of an awareness to understand that this company is building out their supercharging network. Remember, this is 2013, right? The Model S has just come out. They're still building out their supercharging network. While that's happening, there's other public charging stations and people can charge in their own homes. The fact that people are making comments like this just shows the level of ignorance. He just simply was unaware of this obvious fact. Just for historical context, there were well over 100 superchargers already built out in North America when this went to air, and of course Tesla had already told everybody they were building out their network in line with their production and delivery. So this is crazy. Imagine this is the argument he's basically making. Imagine you've invented like a water filter, a water purifier, and he says, "Greg, where are you going to get your water from? The beach?" When everyone has water plumbed into their homes, just as they have electricity plumbed into their homes. I'm sure the angle he was going for is that there's no charging stations. But again, supercharger stations are already being built out. The network was already available as public information. Tesla told everybody that their plans to scale with production. It's so bad.
But but Andrea, let me just.
It'll bring down my grid.
Let me just point this out, though, because we were looking at shares of, we were looking at the at some of the numbers around Tesla. Andrea, it's at 1,100 times PE. That is, I mean, that's astronomical. How can that be justified?
Yep. So in 2010, 2011. Wait. In 2010, 2011, Tesla was trading at what the company could do in the future. So it's trading on potential earnings. If they max out the factory, 500,000 vehicles a year, it's a $300 stock. Okay, so Tesla's trading on what they can do in the future. And they've got a factory that can do about $20 billion in revenue.
Just got to give some credit where it's due. Tesla did a little bit over $20 billion in revenue last year, predominantly from vehicles produced in Fremont. Spot on.
About $2 billion in net income, assuming a 10% NOPAT, and that's about $14 to $15 a share. So there's still room for it to go.
Well, Mark?
Andrea, I have some swamp in Florida I want to sell you.
You got to drive the car.
You've got to drive the car, and she's right. Once again, such a simple step. So many people have missed along the way and lost stupendous amounts of money as a result. And if anyone's out there that's bearish on Tesla and you've never been in the one, get in a Tesla and see what they're actually about. Experience the product. You can still remain bearish after that, I don't care, but just at least experience one, okay? Go get in a Model 3, ask somebody that owns one that you can borrow, or go get a test drive, whatever. Please do yourself the favor.
All right, well, talking about
Consumer Reports, it's not just me, it's Consumer Reports says it as well. Yeah, it's a good car.
Wait, Andrea, please, just for a moment. You've got a business that lost twice as much money as it did 4 years ago on an operating basis, over $300 million, and it has 2.5 times as many shares. I'm going to be able to wallpaper a new bathroom with shares of Tesla.
Amazon.com lost money. Amazon.com lost money all in the beginning as well. A lot of companies lose money when they're starting out.
Perfect analogy. I've made this one myself in the past. People just somehow fail to acknowledge what is required to grow in certain industries to achieve certain goals. Amazon was completely misunderstood for like 15 plus years. Tesla, it seems to have been the same case. If you're in a capital intensive business and your goal is major scale, you're going to need to spend a shitload of money to get there. So if a company is losing money, if they're losing more money with each successive year, this is not like a disaster. Maybe it is. More likely, it's a company that's deploying capital effectively to reach their goals of scale. If you miss this, you can really miss out on a lot of opportunities. And just for the record, let's have a look at what Amazon was trading at when these statements were made. So this was 2013, around May. Fancy that. It's up about 600% since.
I think you could say Amazon.com has been a pretty good company, pretty good stock. Just an example.
Guys, what I was going to do is I was going to play for you a soundbite. We don't have time right now from Elon Musk where he talks about the next generation, right? The Model X, and he says eventually he wants to sell cars that are $30,000 to $40,000. Is that a pipe dream, Andrea?
Lucky us, we're in a time machine 7 years into the future, and it does appear that Tesla are selling a vehicle under $40,000. There you go.
Well, Betty Lou, they couldn't even sell Chevy Volts.
No.
They quit production of Chevy Volts.
The Chevy Volt was comping against a cheaper car. Tesla is the car, because they have battery technology that's 5 to 10 years ahead of the competition.
Okay, guys, let's just pay attention here. This aired in 2013. In 2013, it was already discoverable, knowable, that Tesla had a technology lead in their core technology, the most important component in an electric vehicle, the battery. This was already discoverable that had a 5 to 10 year lead. Well, guess what? Today they have maintained that lead. They are still half a decade or more ahead of their competitors. Competition. Oh, well, there isn't any yet. They're so far ahead of the people that are trying in the future to be able to compete with them to actually enter the EV race. People still don't know this. I don't understand how there are analysts and people in the finance media who still do not understand this fact that Tesla has a massive lead in their core technology, the battery tech. Alright, Stephen, just calm down, okay? Let's just move on to the next part.
The car sells really well against its peers, meaning what you pay for, you get a really good car for what you pay for.
I'm interrupting again, but I just have to. This is such a valid point. It was then, and it's even more true today. People think of a Tesla as like a luxury vehicle, very expensive, etc. Yes, this is true. The prices are coming down, and they'll continue to come down with scale and improvements in the tech. But beyond that, it's not about the cost, it's about the value. There's lower money running costs, there's lower maintenance costs over the cost of a lifetime of car ownership, sort of 10 plus years, if that's how long you keep a vehicle for. Even buying like a brand new Tesla today is going to work out much cheaper than buying something like a Honda Civic or like a Toyota Camry or Corolla or something. This is really important to understand. And then on top of that, there's the infotainment, the safety features. Like when you actually encapsulate all of the value that you get for the money you spent on a Tesla, there's literally no competition. There's nothing else that you can spend $1 and get the same equivalent amount of value, not even close to it. This is the whole point that people are really missing. Prices are coming down and the value is already through the roof. We're seeing this play out now. Teslas are selling themselves because of this value. That's the only reason that people are ranting about them. If there was something else there that provided equivalent value, you wouldn't be hearing like an army of Tesla fanboys running around saying how amazing their vehicles and tech are, because there'd be something else to talk about as well, but there's not yet. Still. Nothing comes close in terms of value of a Tesla.
So
Tesla
let's
has
see,
proven that they can do a really good car at $70,000. I think people believe that they can do a down-market car.
Porsche 911s in the last year. 26,000
So
Porsche
Tesla's
911s were sold in the last year. I don't think so. They're not going to sell 20,000 cars this year.
Man, there is a long history of bears being wrong and saying Tesla's not going to meet their delivery guidance. For the record, Tesla delivered 22,300 vehicles in the year of 2013 when these comments were made in May.
2% market share is all Tesla has to get in their target category.
All right.
And I wouldn't want to bet that Tesla couldn't do 2% market share.
All right.
Saying 98% of people who buy cars won't buy a Tesla.
And obviously we have the benefit now of being 7 years into the future to see how Tesla's market share is actually progressing. And I mean, what else is there to say? They've basically got everyone else tied up, bound, gagged, blindfolded, and are absolutely dominating.
Guys, I need to leave it there. Andrea James, thank you for joining us. Mark Travis as well on this debate over Tesla shares. We'll be back in just a few minutes on In the Loop.
So to sum this one up, I really just wanted to give you guys a bit of an insight into what the thinking was 7 years ago around Tesla, both from a bullish and bearish perspective. What were they asserting that Tesla would or wouldn't do, what their prospects were looking like, etc. What were their comments around execution, the actual products themselves, the technology, and maybe we can learn a few things, because let's put it this way. If you're hearing the same kind of comments from bears around Tesla today, you shouldn't be, because 7 years have passed. It's been a great opportunity to adjust your thinking and your thesis around the company because a lot more additional information has come through. We've seen demand growing, sales growing, production growing, revenues growing, there's a lot of things. So if you're hearing these same kind of things today that were being said 7 years ago, it is possible that you're hearing comments from a person that just doesn't really have the capacity to reason. Maybe their emotions are in the way, they've got a bit of a blind spot, or perhaps they just view the world a little bit differently to me. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. And since you made it this far, there's a good chance you either like the content or you're just really lazy. If it's the former, and you'd like to help out the channel and receive up to 2 free stocks, check out the link to the WeBull app in the description below.
BS. If you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. Either way, the best kind of support is you being here and watching, so thanks again.